Cathie Wood, the CEO of investment firm ARK Invest, has just sold a large stake in Tesla, the electric vehicle maker led by Elon Musk, in her first Tesla sales since January. While selling Tesla stock can generate negative headlines for Wood and the electric vehicle pioneer, Wood appears to be as optimistic about the electric vehicle leader as ever. Why did she sell Tesla stock? Is she still bullish on Tesla? We'll be revealing all in today's video, so be sure to keep watching. The superstar stock picker has been reported to have dumped more than $200 million in Tesla shares to splurge instead on recently struggling stocks like Coinbase, Zoom, and Roblox, which have dropped as much as 50% this year. She also bought a share that was sure to turn heads, NIO, commonly referred to as the Tesla of China. Many investors have been asking when Cathie Wood would buy NIO, and the answer is right now. Even though it announced still solid fourth quarter profitability, NIO plummeted 9.42% to $19.91 recently, amid other broad declines in US-listed Chinese companies. Cathie Wood, a much-anticipated buy-the-dip player, bought NIO stock as it plummeted. According to Cathie Wood's daily trading activity email, her ARK Innovation ETF also sold around 22,000 Tesla shares. Despite this, Tesla remains the largest holding in the ARK ETF, accounting for nearly 10% of the ETF's assets. In fact, for the previous 3 years, Tesla stock has made up roughly 10% of the portfolio, plus or minus a few percentage points. In the first quarter of 2022, holding Tesla was a plus for the Innovation ETF. Tesla managed to sidestep the first quarter sell-off by rising roughly 2%. Despite this, the ETF suffered in general. In the first quarter, ARK Innovation fell about 30%, far more than the S&P 500, which fell 5%. If we're being honest, inflation and rising interest rates have harmed all growth stocks. The NASDAQ composite is also behind the S&P 500, falling over 9% in the first quarter. It's common knowledge that Wood has proclivity toward owning fast-growing stocks. During the market downturn, they were hit considerably harder than the NASDAQ stocks. Tesla was the only one of the S&P 500's trillion-dollar mega capitalization stocks to complete the quarter with a profit. Alphabet, Amazon.com both had their stock prices decline by roughly 4% and 2% respectively, with Microsoft and Apple both falling around 8% and 2% respectively. Tesla may have outperformed its competitors because its growth was stronger than predicted. In early January, the company announced that it delivered around 309,000 vehicles in the fourth quarter. That was far higher than the estimated 275,000 by Wall Street. Tesla's delivery accomplishment was followed by better-than-expected earnings later in January. The stock of Tesla closed the quarter with a gain, but it was not without its share of volatility. On February 24th, the stock hit an intra-quarter low of $700, down approximately 34% for the year. From there, they rallied by more than 50% until the end of March, completing a stunning comeback. Wood bought the dip during this downturn, investing in the brand with plans of turning a profit, so it's not surprising she has sold off stock on the heels of Tesla's rebound. The transactions came after Tesla's stock had risen more than 40% in recent weeks, as the broader market recovers from a geopolitically fueled sell-off, and they are ARK's first Tesla sales since mid-January. The New York City investment firm bought roughly 60,000 shares in mid-February after the stock had fallen nearly 30% for the year. Even though Tesla was ARK's best-selling stock last week, the business sold approximately $21 million worth of 6 other equities, including Vertex Pharmaceuticals and software company Splunk. So we don't think the sale of Tesla stock is an indication of Wood's loss of faith in the electric brand. Wood defended her poor performance of tech stocks and her fund this year in a recent interview with Barron's, saying that ARK is disrupting the financial services business and that the value stocks are in a bubble. Despite rising over 150% in 2020, ARK's Innovation ETF dropped 24% last year and is expected to drop another 27% in 2022. This year, the S&P 500 is down 4%. Wood finally explained her actions, saying ARK prefers to trade around a company's volatility, buying when the prices are low and selling when prices are high. She said, "We naturally just take profits when we feel like analysts are hyperventilating about a stock, including Tesla, because we know we'll get another opportunity connected with the controversy to purchase the stock lower." She has maintained her stance on being bullish on Tesla, and given the recent news of a possible stock split, we're with her on this one. Tesla announced on Monday that during its forthcoming annual meeting, it will seek shareholder approval for a stock split. According to Bank of America, stocks that announced a stock split increased 25% on average over the next 12 months, compared to 9% for the broader S&P 500. Wood's strategy, which ARK claims to focus on disruptive innovation, has been met with increasing skepticism on Wall Street. No surprise, as traders betting against ARK's flagship fund made more than $1 billion in January, surpassing their entire haul of $941 million the previous year. "Shorting innovation in America is insane," Wood remarked at the time regarding the shorts. Scion Asset Management, the hedge fund led by investor Michael Burry, who famously predicted the housing market crash in 2007, is one of her critics. Scion Asset Management also disclosed late last year that it holds bearish put options on $30 million worth of ARK shares. The official website of ARK Invest has now updated its ARKQ positions to include NEO, reflecting the above change. In ARKQ's holdings, NEO is presently placed 36th. This appears to be a substantial change for Wood, as ARK Invest formerly owned a very large stake in Tesla and has since invested in BYD, XPeng Motors, and now NEO. As it seems, Wood has decided to invest across the electric vehicle industry. We took a look at her recent investment activities. In a Yahoo Finance interview in early February last year, Wood referenced NEO, calling it a battery swapping firm that will win the day in China. On the downturn, ARK Invest scooped up 420,057 shares in NEO, valued at $8.36 million based on Friday's closing price. ARKQ now owns 928,648 shares of XPeng, worth around $27 million or 1.63% of its investment, as the Chinese company's shares continued to tumble late last year. In addition to purchasing NEO and XPeng, ARKQ also purchased 80,000 shares of BYD for $4.4 million. NEO has been operational since 2014, and now it's one of China's leading EV manufacturers, having delivered 91,429 electric vehicles in 2021. Over the course of 2020, that number more than doubled, and NEO's income increased by 122% to $5.6 billion in 2021. Importantly, NEO stated in its most recent earnings conference call that if its plans work out, it may break even in the fourth quarter of 2023 and potentially make its first full-year profit in 2024. NEO has 3 cars in the works for 2022, as well as aspirations to enter numerous European markets. As expected, the business began delivering its premium car, the ET7, on March 28th. NEO's long-term goal is to create a mass-market brand that sells affordable electric vehicles with the same high-end technology as its luxury vehicles. And while the company is not yet profitable, it still looks to be a good investment. In the meanwhile, if China and the US can overcome their disagreement over accounting regulations, as expected, NEO should be able to shake off a significant cloud and focus on growth, which should further add to the stock's appeal. In more recent activity, Cathie Wood has also been buying Coinbase shares in 3 ARK Invest ETFs regularly this year, including back-to-back purchases on March 28th and March 29th. Crypto assets are one of Wood's top growth ideas for 2022 and beyond, and Coinbase Global has perhaps benefited the most as a publicly traded business from the current cryptocurrency bubble. The increase in weekly market capitalization of the worldwide cryptocurrency market from 2010 to March 2022 was nothing short of a miracle, with practically all of the gains occurring in the last 2 years. Coinbase Global is the most popular cryptocurrency exchange, and it makes money by charging a charge every time someone buys or sells a cryptocurrency. Coinbase's verified user account increased to 89 million in 2021, and trade volume on its platform increased by roughly 8-fold to nearly $1.7 trillion. Last year, the corporation made $3.6 billion in profit. The stock of Coinbase is going to be volatile, but the company's long-term growth potential is enormous, especially now that it's created a non-fungible tokens marketplace. To be sure, Wood's decision to sell her Tesla stock doesn't necessarily imply that she has lost faith in the stocks. ARK is, after all, a business, and her priority is making returns on behalf of her investors, so we believe there's nothing to worry about. She's still all in. What do you think about the stocks Wood just bought? Comment down below.